Well, there are two areas that we see right now are being interesting. One is energy. We're still able to raise debt financing in energy, buying cash-produced, cash-flowing assets. In that case, the banks have made a lot of money over ups and down cycles, and with the price of oil being where it is, well above where it has historically been, most banks continue to lend in that space on a project financing basis, so you can get financing there. Healthcare is another area where I think people see opportunity going forward. Certainly the whole parameters are going to change with the new government coming in, but that's an opportunity. The demographics are there, the factors are there to suggest that you can make money doing that business, but it's a longer hold period, clearly. But other than that, I'd agree with the previous two speakers that there's really no incentive for us to do anything right now. It's just sit tight, watch prices come down, and hopefully some leverage come back into the market.
You've got a lot of diversity in your portfolio. What are you doing or thinking about with respect to your current portfolio companies in this environment?
Cut costs.
John, let's talk about exits. Do we have any opportunity? Are the IPOs going to come back anytime soon? What are you looking at from an exit perspective?
Well, right now we're just, I mean, it's basically just holding tight. Fortunately, we levered up as much as we could. Our companies last summer just took as much capital as we could to withstand the storm, and basically now it's just sitting tight. The exit possibilities are nil. I mean, we've got a couple of strategic discussions going on, but that's really the only possibility at this point. You really can't. Even in the energy space, the MLPs have been battered, as you know, so any kind of public exit is just not possible at this point. I mean, ultimately that will turn around, clearly, but I think, as we all know, returns are going to come down just because of the amount of time we're going to have to hold these assets and hopefully keep them operating and sufficiently, cutting the costs and making them better companies in the process.
Mm-hmm. With respect to international growth opportunities, where do you see them? What geographies, potentially what industries? John, can I start with you?
We've got 44 funds scattered across the globe and probably the most global of the private equity firms. And we still are able to put money to work into BRIC countries, primarily China and India at this point, but even Brazil as well. The public markets in those countries have been battered down, so curiously they offer some pretty interesting investment opportunities right now, because you've still got the underlying growth. I mean, China's complaining about growth dropping to 8%. I mean, good Lord, we'd all be grateful for 8% growth. And I think a lot of that, what's fascinating is watching that growth transform from export-driven to domestic consumption. And so, for example, in some of our funds, the growth capital businesses, those are really posited on investing in companies that serve the domestic economies. And sure, there are going to be bumps on the road, but I think when you look across the world, the BRIC countries do offer some exciting opportunities, we believe.